Hello everyone. This is the pre-market report video for today, 19th February 2025 for the Indian stock market in terms of Nifty and Bank Nifty. After a long time, last night US market had a very quiet day, but the surprising thing was yesterday S&P 500 closing hit another all-time high value. One side Indian market Nifty struggling to pass about 23,000 mark, 12% less compared to its all-time high value which it reached on last September. On the other hand, US market scaling all-time high value very frequently this month in a very stable way. Anyway, please look at the S&P 500 price movement. Throughout last night, on the top, it went 15 points positive. On the negative side, it was just down again 15 points. In total, the whole difference between the day's low and high was just 50 points, which was less than 0.5%, meaning it was very flat. Here, though US market closed positive and reached all-time high value, it looks like they're waiting for some catalyst. Now almost all the major companies except retail sector released their earnings, mostly good, and most of the macro event also completed. Tomorrow, Fed FOMC meeting minutes is due to release, but between the Fed FOMC and now, we had multiple times Fed chairman interview and also he did testified in front of both Senate and Congress. So, market already factored about the FOMC meeting minutes, hence I'm guessing it will be a non-event. Either way, last night US market closed flat with positive bias. Dow Jones increased by 0.02%, S&P 500 was up by 0.25% and Nasdaq was marginal positive 0.07%. In case of VIX, it also closed flat. Here, one more thing. Yesterday, Nasdaq was saved by Intel and small stocks, whereas big stocks crashed. If required, please pause and have a look. All the big tech stocks closed down between 0.5 to 3%. So the takeaway is US market closed marginal positive, but it is signaling the buying exhaustion, especially on the big tech stocks. Just for info, this week Thursday, Walmart earnings is due to release that expects to give some clue around US consumer perspective. About oil, last night Ukrainian drones attacked the Russia's pipeline to Kazakhstan, which in turn, as per Russia, oil supply to Kazakhstan reduced by 30 to 40%, which equals to 380,000 barrels per day less oil on the market. This less oil supply increased the oil price by 1.5%. At the time of this video, WTI crude trading near 72 US dollars per barrel and Brent crude traded at 76 US dollars per barrel. Coming to Indian ADR, Icici Bank crashed 3% and Infosys was down 0.77%. Here, though HDFC Bank closed positive, but on the arbitrage wise, it also indicating negative of over 1%. Only Wipro showing some positive bias. So overall, banks clearly negative. IT stocks were mixed, but by chance, if the dollar premium in Infosys eroded means, then IT may turn positive today. However, those banking stock negativity was not visible in the GIFT Nifty. Today early morning, it traded at 22,968, equating that with the spot market. For now, it's indicating flat opening with positive bias. So that's all about the dollar market. Now let's move to the Indian market related info. First, as usual, let's have a quick recap. Yesterday, for the second day in a row, Nifty closed flat, but again another session on the intraday, it dropped to 22,800 but recovered on the day's end. Sector wise, 6 major sectors closed positive and 6 major sectors closed negative, so balanced each other and none of them increased or decreased above 1%. However, overall 72% listed number of stocks closed negative, only 25% was increased. Institution wise, both FII and DII yesterday turned as net buyers. FII net bought for 4,800 crore rupees, whereas DII net bought for around 3,100 crore rupees. Here, one important thing to note is part of the reason for FII turning as net buyers was due to this 8,000 crore rupees Airtel block deal. But again, I only say part reason. You might ask me why. If required, please pause and have a look. The usual average gross sales and purchase value of FII will be around 14 to 17,000 crore rupees. Yesterday and even in the last 4 trading sessions, gradually gross sales value was dropping. In the previous session, it dropped to below 10,000 crore rupees. Hence, clearly, I think it's an selling exhaustion. So that also contributed for the FII buying yesterday. In US, it's buying exhaustion. In India, I'm hoping for selling exhaustion. What an irony. Anyway, in the derivative market, as participant-wise open interest, in the index option, proprietary traders changed back again to flat to negative bias. Other than that, both retail traders and FII holding their respective stance bullish and bearish. In the future index, same status, even no percentage change. Moving on, regarding banks ADR negativity, maybe it's due to reaction for Motilal Oswal banking stock analysis report. In short, in the next 2 years, they said they are expecting private banks to increase CAGR of 13.9% and on the other hand, public bank to increase only by 8%. So as per their report, clearly PSU banks not good and even private banks earnings expectation also not great. On top of that, they added their cautious state as competition from microfinance company are increasing and also the stringent regulatory measures from the Indian government. Hence, they cut the future earnings expectation. I mean, as we know, stock market always value the future growth perspective, so we can expect banking stock to be on focus. Then second, US SEC, I mean equivalent of SEBI in US requested the Indian government to help on the Adani bribery case. So today we can expect Adani stocks will also be on focus. As a summary, US market closed positive but on the negative note. In addition, banking stocks indicating the negative trade. However, GIFT Nifty and Indian IT ADR both indicating the some positive bias. Then yesterday, as per stock open interest, MCX, ABB, BSE, Union Bank of India, AU Small Finance Bank and Prestige got an increased open interest along with a negative close indicates the short build-up. On the other hand, Berger Paint, Tech Mahindra, Adani Green, Titan, Indian Bank and Bajaj Finserv got an increase in open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, at 12:30 p.m., UK's consumer inflation is scheduled to release. Then after our market close for US, new housing starts, Fed meeting minutes, 20-year bond auction data, and FMC member press conference are some of the important things we need to keep an eye out today. Coming to technical, as we discussed, Nifty opened flat and was range bound throughout the day in the range 23,000 to 22,800, then closed above 22,900. Thus, on the daily chart, Nifty formed a small-bodied bearish candlestick pattern with a long lower shadow, resembling a doji-like candlestick pattern, though not a classical one, indicating indecisiveness among buyers and sellers. Generally, this is considered as a bullish reversal pattern, but confirmation is required today. However, still overall, the structure remains weak as Nifty trading below all key moving averages and also in the lower Bollinger Band. Hence, in the short term, Nifty might be negative as long as it stays below 23,150. Support is at 22,800 and fall below this level might trigger further correction. Immediate resistance is at 23,000. In case of Bank Nifty, it opened 50 points gap down. However, defended 49,000 on the closing basis for the third consecutive session. Then closed at near 49,100. Thus, on the daily chart, Bank Nifty formed a bearish candlestick pattern with upper and lower shadow, indicating buying interest at lower level and minor selling pressure at higher level. In addition, it's still trading below all key moving averages as well as in the lower end of the Bollinger Band, signaling weakness. Hence, a decisive break above 49,300 could trigger a sharp rally towards 49,800. On the options front, the maximum call option open interest was at 23,500 strike, followed by 23,800 and 24,000 with maximum new call option rating at 23,200 strike and then 23,800 and 23,000. On the put side, the maximum open interest was at 22,000 strike followed by 22,500 and 22,700 with the maximum new put option rating at 22,700 strike and then 22,200 and 22,450. Thus, from options data, Nifty is expected to face resistance at 23,000 to 23,200 zone, while support might be at 22,700. So that's all in this video. Hope you all got some information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.